Today on the Roxom Report London, Bitcoin dropped below 99,000 this weekend. We'll check in on where we're at right now. Texas adds Bitcoin to its reserves. Coinbase gets their MICA license. Visa pushes their stablecoin. All that and much more live right here today on the Roxom Report. Good afternoon and welcome to the Roxom Report. We're coming to you live from the heart of London to give you our takes on the latest and greatest Bitcoin news. Thank you for joining us today on this beautiful sunny day. Without further ado, let's get started with the biggest Bitcoin story making waves today. This is Top of the Block.
Okay.
Bitcoin dropped sharply over the weekend, falling below $99,000 for the first time in more than a month. The decline comes as tensions rose in the Middle East and investors began reacting to renewed concerns about inflation. The price of Bitcoin hit its lowest level since May. Ethereum, the second largest digital coin, also plunged, down more than 10% at one point. Other popular cryptocurrencies like Solana, XRP, and Dogecoin saw steep losses too. By late Sunday, the market had started to stabilize. Bitcoin recovered slightly to just under $101,000. That's still about 1% lower over 24 hours. Ethereum also bounced back a bit, but remained down around 2.5%. The sell-off appears to be driven by two key concerns: geopolitics and inflation. Tensions between the US and Iran escalated after reported US strikes. Iran then threatened to block the Strait of Hormuz, a key shipping route that carries about 20% of the world's oil supply. According to JP Morgan, a full closure of the strait could push oil prices up to $130 per barrel. That could cause US inflation to climb back towards 5%, levels not seen since March of last year. Higher inflation would likely mean higher interest rates, and that's causing traders to pull back from risky investments like crypto. Bitcoin is often described as a hedge against inflation, but right now it's behaving more like a tech stock. Data from research firm Keiko shows Bitcoin is once again moving closely with the Nasdaq index, which tracks many big technology companies. Institutional interest also seems to be cooling. After over $1 billion flowed into Bitcoin ETFs earlier in the week, inflows dropped to nearly zero by Friday. Technical factors played a role too. When Bitcoin fell below $99,000, it triggered forced selling on offshore trading platforms. In total, more than $1 billion in crypto positions were liquidated, most of them from traders betting on prices to go up. All right, that's our top of the block story for today. We will be right back after a quick commercial break.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. Let's take a look at how the markets are moving in Europe right now. So, European stocks declined on Monday as the US announced its collaboration with Israel in striking Iran's nuclear facilities, heightening fears of a Middle East conflict escalation. The Pan-European Stocks 600 index dropped by 0.3%, with other regional indices also falling amid rising geopolitical tensions. The oil and gas sector bucked the downward trend, rising by 0.7% due to surging oil prices driven by concerns over potential supply disruptions, especially fears that Iran might block the Strait of Hormuz, a critical route for global oil transport. Travel and leisure stocks were negatively impacted, falling by around 0.8% as investors reacted to the heightened risk from the Middle East tensions. Meanwhile, some individual stocks like Spectris surged significantly following acquisition news, showing mixed sectorial performance. All right, now having a look at the US stocks. US stock futures are slightly up this morning, with the S&P 500 figures rising about 0.3%. The Nasdaq futures up around 0.4%, and Dow futures increasing roughly 0.1%, as investors cautiously await Iran's response to US strikes on its nuclear sites. Oil prices initially surged after the US attacks on Iran, but have since pulled back somewhat, with current Brent crude trading near $77 a barrel, reflecting easing fears of prolonged supply disruption. Energy stocks are gaining in per market trading. Commodities like gold have edged higher amid geopolitical tensions, while cryptocurrencies such as Bitcoin and Ether have declined sharply, showing mixed reactions across asset classes. Okay, moving on to what's been going on in the Bitcoin world. Let's have a look at those. So despite recent geopolitical tensions causing a weekend dip, Bitcoin has rebounded above 100,000 and is trading around $101,264, with the short-term holder realized price at 98,200, acting as a critical threshold for maintaining bullish momentum. Institutional interest remains robust, with increased inflows into Bitcoin ETFs and positive correlations with crypto-related stocks like MicroStrategy, signaling confidence in Bitcoin's recovery. However, the overall crypto market is slightly down today, with Bitcoin falling 0.7%, but holding near the psychologically important $100,000 mark. Okay, I'm going to go to Anton, our producer up above. What do you make of these figures today? Not as sharp a crash as I had anticipated with everything that's going on in the world right now. Is this sort of as you'd expect, not as bad as you'd expect?
Yeah, that's right. I mean, the dip was scary this weekend when we got under 99,000. We'll talk about that more I'm sure later in the day. But for now, it feels like we're all playing the waiting game and seeing what happens. I mean, there was a huge world news occurrence just a few days ago, and we're waiting for the response. And I feel like markets are taking a wait and see. Certainly not in a positive direction, despite the rebound. We're still much lower than where we started, where we ended the week last week. But yeah, it feels like the coming days will tell us a lot about how the rest of the week is going to go.
Yeah, agreed. I'm thinking through of historically with Bitcoin, big events, or if the market does have a dip, Bitcoin seems to follow it for a bit and then bounces up when there's following the uncertainty. So perhaps we're seeing that happening again, and it might be in for a treat.
Yeah, I guess the question is, was this the post news rebound, or have we not gotten to the low end yet?
Yes, yeah, I still think there's definitely potential for it to go down a little bit more before it rallies again. We will be reporting on it throughout the week and find out. Okay, we're going to cut to a very quick commercial break, and we will be back with the Global Gist.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back. It's time for the Global Gist, which is your quick spin through the top stories shaping finance, tech, and the digital asset world. Now let's get into it. Our first story today takes us to Texas. Let me speed this prompter up. So Texas has officially become the first U.S. state to commit public funds to Bitcoin. Governor Greg Abbott has signed Senate Bill 21 into law. The bill creates the Texas Strategic Bitcoin Reserve, a state-managed fund that will hold Bitcoin as part of Texas's long-term financial strategy. This reserve will operate separately from the state's general treasury. It's designed to boost financial resilience and potentially act as a hedge against inflation. That means it could help protect the state's finances if the value of the US dollar falls. The law also sets strict requirements. Only digital assets with a market value over $500 billion can be included. Right now, that means only Bitcoin qualifies. The reserve will be managed by the Texas Comptroller's says comptroller, but I think that means controller's office, and supported by a 3-member advisory group. Each advisor must have experience in crypto investing. The reserve isn't limited to just buying Bitcoin directly. It can also grow through events like airdrops, which are free token giveaways, or forks, which happen when blockchain splits into two. It can even accept donations from the public. Every 2 years, the state will publish a report showing how much Bitcoin is in the reserve and how it's performing. Governor Abbott also signed a second bill to protect this reserve. That law prevents lawmakers from using it to cover other parts of the state budget. Texas now joins Arizona and New Hampshire in approving laws that allow Bitcoin reserves. But it's the first to actually fund and manage the reserve on its own. Meanwhile, public companies continue to add Bitcoin to their balance sheets. Last week, the Blockchain Group, a tech firm in Paris, bought nearly $20 million worth of Bitcoin. And in the US, a firm linked to President Trump's crypto advisor raised over $50 million to buy more. All of this points to growing momentum behind Bitcoin as a financial asset, both in the public and the private sectors. Okay, Anton, what do you make of this? Texas buying into setting up a Bitcoin reserve and actually managing it and funding it and doing it. They're being quite ahead of the curve there.
I think this is a good move from a governor whose moves I do not like.
I would have to agree
at all. But this is a smart one.
Yeah.
I think everybody should be hedging their bet with Bitcoin, especially as the U.S. is increasing regulations for it and kind of paving the way for increased use of Bitcoin and other digital assets. So it feels like a good hedge bet. It feels like they're putting things in place to keep it in check and keep a watchful eye on it. I like this move. I also thought that the list of states where this is happening is pretty interesting. Texas, Arizona, and New Hampshire. Texas and Arizona tend to share some similar political views. New Hampshire, I think, is not of the same ilk.
Yeah.
So it's interesting. It just kind of goes to show that this is not exactly a partisan issue and could be the start of much more influx into a Bitcoin reserve for the U.S. and for states themselves. I think it's interesting that it feels partisan because Trump is backing Bitcoin so hard, but I think when you come right down to it and speak to various policymakers about it, I don't think this runs on party lines.
Agreed. Which is only a win for Bitcoin, it seems like.
Yeah, exactly.
Having that support across the aisle.
Yeah.
Okay, well, we're going to cut to a quick commercial break, and we'll be right back with more Global Gist stories.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Coinbase has officially secured a MICA license in Luxembourg, giving the crypto exchange full access to offer its services across the European Union. The license falls under Europe's new Markets in Crypto Assets framework, known as MICA. It provides clear, unified rules for crypto companies operating in the EU. Coinbase now joins other licensed platforms like OKX, Bybit, and Crypto.com as competition heats up across Europe. Alongside the license, Coinbase has named Luxembourg its new European headquarters. The company praised Luxembourg's progressive approach to blockchain and crypto regulation. Since 2019, the country has passed four blockchain-related laws and taken steps to support the sector across all levels of government. Coinbase shares rose nearly 5% after the announcement, closing just under $310. That follows a string of major milestones, including its $2.9 billion deal to acquire options platform Deribit, and its recent inclusion in the S&P 500 index. Crypto activity is picking up across Europe, especially since MICA came into full effect late last year. Today, up 20% of European investors. 20% of European investors hold some form of digital assets. More are using crypto for everyday purchases, especially retail, food, and online services. And adoption is growing quickly in Eastern Europe's DeFi space. Anton, great news. What do you think?
Yeah, it is good news. Coinbase was sort of my first foray into Bitcoin. It was sort of the easy one. It was the most legit in the U.S.
Yeah.
Did you have the same?
Yeah. I think that was the easiest one for me. Never dabbled with crypto.com despite all of their advertising.
Yeah, or the arena that they bought.
Yeah,
or bought
or sponsored.
The name rights for.
Yeah, exactly.
But yeah, it's interesting that Luxembourg was their choice. We had heard a little bit about Switzerland becoming sort of an up and coming market for crypto regulation. But it's interesting that they found the easiest route to MICA through Luxembourg here.
Yeah, what was that city that we were told in Switzerland? It's like the kind of Silicon Valley.
It has like 3 letters.
Like Tug.
Something like that.
Something like that.
I didn't want to give it a shot.
No,
I'm glad you did.
Yeah, apologies. That's probably not what it's called. But yeah, just outside of the main capital city, it's become quite a hub. Okie dokes. Should we go into the next story?
Let's do it.
Yeah, okay. On the topic of MICA, Europe's regulatory framework is allowing it to pull ahead in the global crypto race, and the UK is struggling to keep up. This year, the European Union rolled out its Markets in Crypto Assets framework, known as MICA. The new rules give crypto firms a clear path to operate across all 27 EU countries with just one license. And that's a big deal for an industry used to regulatory uncertainty. Now, since MICA took effect in January, trading volumes in Europe have surged. Crypto platform Paybis volume from EU customers jumped 70% in the first quarter. In France alone, activity grew 175%. Major platforms like OKX, Bybit, and Coinbase have now all secured their MICA licenses. These companies say MICA is working because it gives users legal clarity. Investors know what's allowed, what's protected, and how their money is being handled. The rules also require full reserves for stablecoins, audits, and transparency on fees, all of which help to build trust. Meanwhile, the UK is falling behind. A new report from OMFIF think tank warns that policy procrastination is costing the country its early advantage in crypto. Regulators haven't even set a firm timeline for their crypto framework to go live, with suggestions it could be after 2026. Experts say this uncertainty is pushing innovation elsewhere. The UK's treatment of stablecoins has also confused the market. While the US and EU treat them as payment tools, the UK still lumps them in with high-risk investment assets. Across the Atlantic, the Genius Act was passed last week, which created federal rules for stablecoins, giving US retail investors the clarity they need. But for now, the momentum is in Europe. With MICA in place, the region is attracting crypto firms, capital, and users, while others risk being left behind. And by others, we mean the UK. All right, we're going to cut to a quick commercial break, and we'll be back with more Global Gist stories.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Welcome back, everyone. We're going to pick back up on our last story about MICA because it's quite some fantastic legislation for Bitcoin specifically, and it's kind of, we haven't really touched on it much on the show before, but I'm kind of curious how long it's been in the works. Anton, our producer up above, what do you make of it? Do you know much about this legislation? This would have been a great conversation for Freddie New, who we had last week on the show.
Yeah, and that's why I wanted to bring it up, because he sort of touched on a little bit of the issues that the UK is having and they look even greater when you compare it to what the rest of Europe is doing. I mean, Europe seems to be really leading the charge with having MICA firmly in place. The US is catching up with the Genius Act, but the UK is really floundering. I mean, they seem to be. I mean, this article calls it just straight up procrastination, policy procrastination. So this is the new world. This is where it's going. This is where all the big banks are leading. This is becoming a very real asset, and the UK is getting left behind. It's kind of remarkable, and it's hard to understand why. Also,
yeah. I'm not really getting any answers. It doesn't seem like anybody's saying why. I think it's just a very old-fashioned way of doing things, and not being very forward-thinking, not kind of moving with the times or wanting to learn about it. I think when we were speaking with Susie Violet Ward, she talks a lot about just there needs to be education. Like, a lot of these policymakers don't understand how Bitcoin works, and they're terrified of it, but it's because they don't really understand it. So yeah,
that's right. Yeah, and they need to start understanding it quickly. I mean, London is known as sort of the world's bank, and they're going to quickly lose out on that if they don't shape up and embrace where banking and money is going.
Agreed. All right, shall we get back to our global gist stories? Okay, our next story. Bear with me while the story comes. Visa is making a bigger push into the world of stablecoins. The company has expanded its stablecoin operations across Central and Eastern Europe, the Middle East, and Africa. This move comes alongside a new partnership with Yellowcard, a leading African crypto exchange. Stablecoins are a type of cryptocurrency designed to hold a steady value, usually tied to the US dollar. They make digital payments faster and more predictable, which is why companies like Visa are taking them seriously. Visa started working with stablecoins in 2023 when it began settling payments in USDC. That's a popular stablecoin created by Circle, and it is backed by real-world cash and assets. Since then, Visa has processed over $225 million in stablecoin volume with its partners. Now it's going further. Visa says this is all part of a long-term strategy. According to its head of product for the region, by 2025, every institution that moves money will need a stablecoin strategy. The new partnership with Yellowcard focuses on cross-border payments. That means making it easier and cheaper for people in different countries to send money to each other. It also helps companies manage their cash more efficiently. Yellowcard's CEO says they want to build a better bridge between traditional finance and the future of money. That includes tools to make payments safer, faster, and easier to track. Looking at the bigger picture, this move points to a global shift in how money flows. Legacy systems like SWIFT or wire transfers are often slow and expensive. Stablecoins offer real-time settlement with lower costs, especially helpful in regions with limited access to banking. As major players like Visa adopt these tools, it suggests we're heading towards a faster, more digital, and more inclusive global financial system. Anton, this is interesting because last week we were talking about stablecoins and how companies like Amazon, I think it was maybe Target, were talking about developing their own stablecoins to kind of give Visa and MasterCard a run for their money. And all along, I guess these companies are also working on their own tools. So I guess they're trying to stay relevant.
Yeah, I think Visa is scared right now, and it should be. And yeah, they are desperately trying to figure out a way to keep transactions going through them with their stable coins as opposed to others. It's interesting that they're teaming up with Yellowcard, crypto company. I don't really see the benefit broadly of using a Visa stablecoin as opposed to a company's stablecoin that you're buying from.
Right.
I don't see what their sort of the attraction would be there. Visa is gigantic, along with MasterCard. They run many millions of transactions every second. So I'm sure they have a lot of pull, and I'm sure they have a lot of weapons in their arsenal, but I'm not sure which one they can pull out to try to win this battle.
Agreed. Yeah, I also wonder how it works with things like, refunds and chargebacks. And, when you use a credit card, there's certain protections you get. But if you're using the stable coins and these payments and transfers are instant, can they claw money back from merchants and things? Like I'm curious how the old way of doing things works with this kind of new way.
Yeah, I would imagine it'd be easier to do that because it's all on the chain, so all the transactions can be seen, and maybe fraudulent ones can be well, maybe they don't happen as much actually, and maybe the ones that do happen can be clawed back relatively easily, but
Perhaps.
yeah, just guessing here.
Yeah, speculating. Okay, we're going to go cut to another quick commercial break, and we will be right back with some more Global Gist news.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Hey everyone, welcome back. The next story is about the UK's public borrowing, which rose to £17.7 billion in May. That's up from £17 billion in the same month last year, and it's the second highest May borrowing on record. This figure is slightly higher than economists had expected. They were forecasting a number closer to £17.1 billion. Public sector borrowing is the gap between what the government spends and what it earns, mostly through taxes. And while tax receipts are up, they haven't been enough to offset rising spending. Now, the data adds pressure on Chancellor Rachel Reeves, who is trying to keep within strict spending limits. Back in October, the government set aside over £100 billion for investment, but everyday department budgets were meant to stay tightly controlled. There is one silver lining. The current budget deficit, which focuses just on day-to-day spending, actually came in slightly better than expected. The Office for Budget Responsibility predicted £13 billion, and it ended up being £12.8 billion. Still, the overall picture is challenging. Borrowing for April also came in higher at £20.2 billion. That made it the fourth largest April deficit on record, only beaten by the peak pandemic years and 1 month in 2012. Slowing economic growth is a key concern. The Bank of England and the International Monetary Fund have both downgraded their UK forecasts. And if growth continues to slow, tax income could drop, putting even more pressure on government finances. Taking a look at Bitcoin, rising government debt and weaker economic forecasts often drive interest in alternative stores of value. If confidence in traditional money systems wobble, some investors may look at Bitcoin as a hedge. It's not guaranteed, but it is part of the broader economic backdrop that can influence Bitcoin, the price of Bitcoin. Okay, Anton, any thoughts on that? Again, we had so much to talk about with Freddie New last week. I think this was right up his alley. Yeah, Rachel, things aren't looking too good. The UK is spending more than it should be.
Yeah, definitely. And not only is it spending more than it should be and borrowing more than it should be, which feels very much like the United States with their runaway spending. But this article just came out today saying that Reeves may need to raise taxes by £20 billion in autumn after the UK borrowing rises. And taxes are pretty high here already.
Yeah, they are.
So the fact that they might have to go up is really worrisome. They were saying that the deficit reached 17.7 billion in May, like you were saying, second highest record for the month. It just doesn't feel like there is much of a plan.
No.
Here,
Yeah.
Which is the most worrying part.
Yeah, agreed. Yeah.
Yeah.
Just cuts and tax hikes. I mean, there's also so much government waste that happens. You know, the HS2 railway that nobody wanted that cost billions and billions. And, you know, the country is people pay a lot of taxes already, needing to borrow. It's like, why are there, stop wasting money on things. But that to me, I find that quite frustrating. But yeah, I don't really understand what the plan is. Labour said that there wouldn't be tax increases, and it's likely that they'll just keep coming. So it's,
For the HS2 is an interesting example of waste. I think that would be a good one to explain to any viewers from outside of the UK.
Yeah.
So high-speed rail that was supposed to connect northern England with London.
It's been going on for probably, I don't know, 20 years.
Right.
It's a project that is billions and billions over budget.
And remind me, where was it originally supposed to connect, and where have they narrowed it down to?
I don't remember, but it was supposed to connect to one of the cities in the north of England, but they've given up on that. And so, yeah, even the whole point of it connecting these northern cities, it's not going to make it there. And now recently they were saying how they don't even have an end date. Was that right? You'd seen an article about that where there's no end date in sight. And it's like, well, why is the country struggling? Because of these crazy schemes and projects that run into the billions and billions.
They scrapped the date of completion and didn't give a new one. And apparently for a high-speed rail for the town that it can actually get to, or a city that it can actually get to, am I right?
It was only saving
cutting off, how
like
much
half
time?
an hour or
Half an
20
hour.
minutes or something. Yeah. And but the whole idea was to connect the south and the north, to level up the north, and make it easier for people to travel and get up there, and for people to travel down. But the price of the thing probably would have been so cost prohibitive anyway. Rail is so expensive. So if the point was to try to get people commuting or whatever, nobody could afford to do that or take that on any regular basis. So the whole thing has and is a massive waste. So I wish the government would sort of have a look at what is currently being spent on, rather than cutting services for people. Some of these nonsense projects.
Stop spending money on bad stuff. I think that's the message here.
Yeah, UK government. How about that? All right, well, that wraps up the Roxom report from London. Now we're heading over to our RoxomTV team in the US, so stay tuned for the Great Awakening with Nolan. And join us again tomorrow at 1 p.m. for the latest on Bitcoin and financial news. Thank you for watching.
At the tone, please record your message.